What's going on, guys? Welcome back to the video. Welcome back to the channel. If you're stopping by the channel for the first time, please consider subscribing to the channel. While you guys are at it, go ahead and smash that like button. I really would appreciate that. Well, folks, we spent the last several days in Florida. We're actually looking to potentially invest in Florida real estate. You guys know we talk a lot about passive income, investing, personal finance, income generating ideas, passive income ideas. And so I wanted to add to our real estate investment portfolio. And I wanted to do so in an area where, we vacation a lot and where we can actually film more content as well as create and generate additional streams of passive income. Well, if you guys don't know, out of all of the investments, real estate is probably one of my more, I don't know if I want to say it's my favorite investment, but it's certainly one of the more fun investments. And the reason why I really like real estate, number one, it's different than stocks. Stocks you can't touch. You put your money, you buy into a company, whether it's Apple stock, Microsoft stock, Amazon stock, Tesla stock, you name it. You're buying your favorite stock, AMC stock, GameStop, Bed Bath & Beyond. And nowadays, you don't even get a physical certificate. You probably logged into your Robinhood app, your E-Trade app, your M1 Finance app, and you purchase shares. And so you basically have it's almost like an NFT nowadays because there's nothing to touch. You have some shares that show up in your brokerage account, but that's about it. Maybe you bought these same companies in your Roth IRA or your brokerage account, your 401k, but the same thing applies. There's nothing to touch. So for me, investing in stocks is a great way to generate passive income and build your wealth and increase your net worth, but it's not really fun compared to how real estate as an investment could be fun. And I'll give you a great example. So what we wanted to do is we wanted to purchase a property that would actually positively cash flow. Technically, positive cash flow wasn't even the main objective. We just wanted the property to pay for itself. And the way we were planning to make it pay for itself, and we're still going to do this, but we're just not going to do it with the property that we happen to tour at the current price. So the way we're going to do this is we're going to leverage short-term vacation rentals on platforms such as HomeAway, Airbnb, VRBO, and basically purchase a property that we would inevitably, at some point in time, pay off or at least see significant capital appreciation over the period of time that we own this property. But in the interim, what we would do is we would take out a loan, we would take out a mortgage, and what we found out in this particular case, a conventional mortgage would not have been applicable to this type of property. We would have needed a portfolio loan, which I did not realize until this particular investment opportunity forced me to learn something new, which is always good. I love learning new things. But in this case, you couldn't just run out there and get yourself a conventional loan for this particular type of condo. And so since the building that we were looking at investing in was, I think it was greater than 51% vacation rentals or greater than 51% non-owner occupant residents in that condo in the building, you had to use alternative financing. And so we ended up learning about portfolio loans. Now, going on beyond that, we're looking at the Florida real estate market. And after crunching some of the numbers, and this is why it's so important to crunch numbers, we were willing to put 20% down on this particular property. Not a big deal. We were planning to do that. However, when we crunched the numbers, we realized that 2020 numbers, 2021 numbers, and 2022 numbers, they were drastically, those were pretty much the highs. Those are the highs. I mean, essentially, post-pandemic, Florida was one of the states that saw a lot of inbound tourists. It was one of the first states to open up that had, that was tourist-based. A lot of people look at Florida as a great place to go on vacation, wonderful weather, beautiful beaches. You've got Disney, you've got the theme parks or Universal Studios, whatnot. if you happen to be in the Orlando area. Then, of course, there's Miami. You got Fort Lauderdale. You've got Panama City, Destin. You've got Fort Myers, Naples, all sorts of areas within Florida. There's just so much to appreciate about the state of Florida. There's no state sales tax, there's no state income tax. So it's a great way to build wealth if it works with your own personal financial strategy. What we wanted to do, though, is find a beautiful condo, ideally with an ocean view, which we found. But we wanted to make sure that this particular property cash flowed, or at least broke even. So cash flow would be nice, but it wasn't a requirement. We just wanted to make sure that, hey, once we make this down payment, we're likely not going to have to come out of pocket for any future mortgage payments or expenses. So after crunching the numbers, looking at what mortgage rates were going to be, it told a different story. Now, I'm of the belief, after doing some research, that Florida's housing market could potentially be on the cusp of a significant pullback. And I feel like Florida is kind of in a housing market bubble. And this bubble is a little bit more unusual than other real estate markets across the United States. Now, one thing is that there's been a tremendous number of real estate properties purchased by owner-occupants as well as investors over the past 24 months. And we've seen the real estate market just appreciate left and right in just about all segments, all states within the United States. But Florida in particular has seen a tremendous amount of inbound transients from other states. And how could you blame them? Number one, I'm not sure what your position is on vaccines, mandates, and whatnot, but Florida was one of the more relaxed states. You also don't have the state income tax. You have beautiful weather. Now, you also have hurricanes. So, with the plus comes some negatives. But this also goes into why I feel like Florida may be on the verge of a potential massive housing bubble deflation. I don't know if it's going to be a pop or not, but here are some of the things that I uncovered recently as a result of my attempt to invest in real estate properties in Florida. Number one, there's been a tremendous amount of investors that purchase properties or homeowners who decided to move out of their existing homes to convert them into short-term rentals, and they're leveraging platforms like Airbnb VRBO to make passive income, to generate income, to pay down their properties, to increase their net worth, and so on and so forth. Well, with that being said, there's roughly 25% increase in the number of new properties that are now on Airbnb and VRBO over the last 12 months. So with that being said, there's a whole lot more competition from a supply standpoint on these platforms. And a lot of people are going to find themselves in a situation, a lot of investors are going to find themselves in a situation where they may not get as much money for rent. They may not be able to rent their properties for as much money in the coming months as they were in previous months. Number one, more states are open. Number two, many economists are predicting that there's going to be a mild to a little bit more aggressive than mild recession in 2023. Now, it depends on what economist you're listening to. Now, I've heard from Bank of America, previous predictions are indicating that they're expecting that the unemployment rate is going to be increasing. The Fed Chair Jerome Powell has predicted and is actually pushing to have unemployment rates increase to address inflation. They're raising interest rates, and the cost to borrow is significantly higher than it used to be. Now, in this case, we could technically still go buy the property, but it won't allow us to reach our financial goals if we were to do so. At the current price of the property that we're looking to potentially invest in, we would have a negative cash flow based on the anticipated or expected rents that would be coming in. So, yeah, we could cover the gap, pay the difference out of pocket every single month, but I'm not trying to create a new expense for us I wanted to invest in this property to essentially have it pay for itself. I'm fine with a 20% down payment, no issue there. But I want this property to pay for itself, and then that way we can vacation there essentially for free, minus our down payment, which is fine. But at least we wouldn't have to come out of pocket to stay in Florida. We could run our business there for, several weeks out of the year, so on and so forth. Well, not only would we have to make a tremendously bigger down payment to bring our mortgage payment down, that's one way. But of course, that would also reduce the yield on our investment. So I'm not okay with that part. I actually watched a video the other day, and someone was saying how if you pay cash for real estate, then the interest rates don't matter. Yes and no. Interest rates would not matter if you're paying cash, but at the same time, a wise investor is going to care about the return on investment that they're getting for their money. So, for example, if you happen to, let's say you're looking at a property that's $1 million, right? So you buy $1 million property and you pay cash for it. If you generate $100,000 in income from that property after expenses, your total net income on that property, if it's $100,000, you generated 10% on your money. You put $1 million in, it made $100,000 by the end of the year. You have a 10% ROI. However, if you're only able to generate, say, $50,000 and you were expecting to generate $100,000 on that property, your net return, your return on investment was only 5%. I say that to say, if you're overpaying for a property in relation to how much you can get in rent, then you're likely going to see a decreased rate of return on your money. Now, hypothetically, if you were to put your money in the stock market and you looked at the average rate of return, let's just say it's 10%. Obviously, it's not guaranteed. Past performance is no guarantee of future performance. But if you put $1 million into the stock market and you generated 10% rate of return, you're making $100,000 on that $1 million investment. So now, obviously, the same rule applies. If the stock market only returned 5% in that first year, you're only making $50,000 on your $1 million investment. So I'm saying this to say, even if you pay cash, sure, you're avoiding the concern of rising interest rates, but at the same time, you still need to be cognizant of how much you're paying for the property. What is the likelihood that the property appreciates going forward? And if you're using it for a form of rental income, if it's an income generating property, you need to look at what are the rent rates that are going to be likely to be collected on that property. How much money can this property generate? And I would look at it from a conservative standpoint. Now, I reached out to companies like Vacasa. I've done a basic analysis on AirDNA. And the numbers were close. They were not the same, but they were close. And they gave me food for thought. And based on these numbers, if I'm having a third-party management company, manage this property while I'm not there, it's going to cost me roughly 18-20%. So after deducting the management fees, anticipated rents, and I looked at it from the worst case scenario to the best case scenario based on the expected anticipated rent rates for the year, it looked like we were likely going to be coming out of pocket somewhere between $15,000 to $35,000 per year on this particular investment. So on the best case scenario, we're going to have to feed this property $15,000 a year. And that's not what I'm interested in doing at this time. Now, if we were to get this property significantly below what the current ask price is, then we could likely make some numbers work. But the other thing I'm looking at is this particular property sold for $740,000 in 2019. Today, barely 4 years later, they're asking $1.7 million. Now, how much of this is how much of this real estate appreciation is really going to stick around? Or are we likely to see a housing market crash in Florida, which brings down that ask price, or forces the seller to bring their ask price down drastically from that point? Who knows? But I will say this. You had Hurricane Ian hit Florida less than a year ago. This created billions of dollars of repairs. Insurance companies in Florida are hemorrhaging money to pay for these different repairs. Many insurance companies are just completely pulling out of Florida, and Ron DeSantis is taking proactive or reactive measures to address these issues in the form of, number one, mandating that properties in Florida, whether you're in a high-risk flood zone or not, have flood insurance. Not everyone has flood insurance. Flood insurance is very expensive in Florida, and he's mandating this to take place. He's making sure that homeowners, condos, condominiums, I'm not sure if this applies to businesses, corporate real estate, I don't know about that, but he's making sure that for a fact, he's making sure that residential properties have flood insurance. That's number one. So what is this going to do? Number one, if a Florida homeowner, investor, whatever the case is, if they don't have flood insurance, they're going to have to go get it. This is going to definitely hit the bank accounts and the wallets of homeowners in Florida. This may put people who are living paycheck to paycheck, this may push them to a situation where they can't afford to continue to live there and meet this new Florida mandate. Now, I'm not sure if this is a live mandate or not, but it sounds like this mandate is coming down the pipeline. If anyone happens to live in Florida, definitely let me know. The other thing is with the HOAs, homeowners, there are a number of homeowners insurance companies that are looking to pull out of Florida because it's such a high-risk state. Hurricanes, climate change, whatever the case is, Florida is seeing a tremendous amount of disastrous weather affecting real estate. And beyond that, some people are kind of working the system and they're getting free roofs put on their homes. These insurance companies are paying for it. Well, the thing is that due to so many insurance companies seeing their profit margins erode, many of these insurance companies are telling their insurers, the policy owners, that they have to replace their roofs to remain covered or to obtain coverage if the roof is older than a certain number of years. And I think it's something like if the roof is older than 5 years, maybe even if the roof is older than 10 years, and it might even depend on the insurance policy or the insurance company, whether it's Travelers, Nationwide, State Farm, who knows. But they're forcing HOAs to replace roofs just to be covered by these insurance policies. So between having to get flood insurance if you don't already have it, roofs needing to be put on these homes in order to remain covered by homeowners insurance policies, this is already a tremendous amount of added expense to homeowners if they don't already have these things in place. And there is always going to be a significant percentage of homes and condominiums, rental properties, owner occupants that are going to fall into this situation. So if you don't have the money, they're going to likely try to finance it, maybe try to refinance their homes and pull some cash out to make these repairs. But the simple fact of the matter is this: with higher interest rates, refinancing is going to be less and less of an option for most people. Thank you, Fed Chair Jerome Powell. In addition, if you don't have the cash to do this and you don't have the available credit line on your credit card, you might look at getting a personal loan, which are going to have high interest rates. But the simple fact of the matter is that there's going to be a number of people, homeowners, real estate investors, who are just not going to have access to the capital needed to be able to meet these demands. This will likely cause people to end up deciding to put their properties on the market to sell the property because they can't afford to maintain it. Now, if this happens, we're likely going to see a tremendous amount of supply of homes hit the market, and we already know we've gotten a crash course when it comes to supply and demand over the past couple of years. So if we suddenly see a flood of homes hit the Florida housing market, we can already expect that Florida real estate prices will start to decline fairly quickly. In addition to that, since many economists are expecting a 2023 recession, it is likely to expect that there is a tremendous amount of people, through losing their jobs, not having the income, maybe even just people not being willing to spend money because a recession exists, they may decide, hey, let's save some money. Let's do a staycation. Let's not take that trip to Florida that we wanted to take. Let's play it safe. Let's save a few $1,000s by not taking this trip to Florida, for example. And what would happen if that does take place is that hotel demand will go down. Airbnb, VRBO, vacation rentals, short-term vacation rental demand will go down. And this will leave the investors, the owners of these properties in Florida, struggling to hit their annual revenue targets, their annual profit targets on their investments. And many of these people could potentially, depending upon the financial situations, now obviously you could ride out the storm, but how long would the storm last? Not all investors and property owners are going to be in the situation where they can say, hey, yeah, we're not getting the amount of money per month or per night for this short-term rental that we're looking to get, but we'll ride this thing out. If your monthly expenses on a particular property are, say, $6,000 a month, but you're only able to get $3,000 per month in rent, how long are you going to be able to float $3,000, feed this thing $3,000 a month to fill the gap, to make that mortgage payment, to make these insurance payments? I mean, this is food for thought. And based on the numbers, Airbnb has seen a 25% increase in units available or placed on the market in Florida. So if we're seeing increased supply, potential decreased demand, added expenses through insurances, multiple different types of insurance being required in Florida, either a mandate from the Florida governor, Ron DeSantis, or mandates coming down from the insurance companies themselves requesting or requiring roofs be replaced, you've got a significant increase in expenses. We're expecting a potential decline in demand in terms of short-term rentals. A recession could be coming down the pipeline. Jobs at a significant rate could be lost. Bank of America is predicting over 175,000 jobs could be lost every single month for the next 12 months. This could potentially be a perfect storm that could wipe out a tremendous number of homeowners, real estate investors, and the like. But at the same time, this could potentially create a tremendous buying opportunity in the future if some or all of these events play out. Now, of course, I'm no economist. I'm just a regular guy talking into a fuzzy microphone that's looking at this thing and saying to himself, hey, I don't know if now is the best time to invest. And I feel like the upside potential right now in terms of investing in Florida real estate is limited compared to a higher potential of downside. And that's all I'm saying. I feel like, yeah, prices could continue to go higher, but I feel like the downside risk is greater than the upside reward. So for me, I'm going to keep shopping the market, camping out, looking for good deals, looking for opportunities, because I still want to invest in the market. I just think that right now, the average price that the sellers are asking for is too much. So let me know what you guys are thinking. Let me know your thoughts. Share your opinions. We don't have to agree. I'm learning every single day. I just wanted to share this experience with you. And this would actually be my first condominium purchase, and it would also be my first short-term vacation rental investment as well. So I'd love to hear some feedback from you guys if you guys have any experience. And one other thing I wanted to note is that I've been seeing a tremendous number of properties. Now, I know it's January right now, but I'm seeing a lot of properties without a whole lot of future bookings. Now, obviously, as we get closer to the warmer months, I expect to see more of those bookings start to get filled. But right now, it's looking a little questionable. So anyway, let me know your thoughts. Hope you got some value. See you on the next one. Be safe.